Last year you called, well, you took an activist approach, let's say, to Bank of New York Mellon, called out the bank for many things that you felt it was failing at. And for that matter, we talked about other positions that you were taking on banks where you felt they deserved the kind of activist treatment. How's it going?
It's going great. I mean, since a year ago being on your show, we have two high-profile activists in BNY Mellon. We have Trian Partners, Nelson Peltz's firm.
No shrinking violet.
That's as high profile as you get.
But we also have Mercado, who...
Nick McGuire.
Exactly, who's calling for the CEO to be fired. Now, what's interesting here, this is a watershed event in terms of having an activist investor on the board of a major bank. That's never happened before.
Activists were allergic to banks.
Exactly. Fear of regulation, fear of the unknown. But why?
Fear of the unknown in terms of what could happen to them?
Well, because the impact...
Or investing in financials is a black box.
Well, we're in this big brother banking regulatory environment, so what will be the reaction of regulators? But I'll tell you...
And who's going to give you that next leveraged loan?
Ah.
But no, look at what's happening. You have regulators actually going to bank board meetings. And I think the root cause of that is the regulators don't trust the investment world to hold the directors accountable. So why don't we go to annual meetings? The only chance...
Well, you do.
Well, why? Yeah, I'm the only one, I think, so far. But why don't more people go to the annual meetings? That's your only chance to publicly hold directors of the major banks accountable. And if, by the way, if you don't do that, then you have a void. And who's going to fill that void? Washington, D.C. regulators.
In other words, if shareholders don't get their game on and actually demand accountability from these boards, the regulators are going to do it for them?
Bingo. And
with results that maybe we'd rather not see.
Yeah, everyone's griping about what are the regulators doing. Well, go ahead and step up to the plate, owners, investors in these major banks, and that's what we're trying to do. And you're seeing a couple high-profile activist investors do that.
The Boney Mellon annual meeting is next week.
It's Tuesday, 9 a.m.
Okay.
What is in store? Set the stage for us.
Well, I have a list of questions. One question is...
Shocking.
Look, Bank of New York missed their 2007 merger targets. They missed their 2011 targets. Since the 2007 merger, predicated on scale, they've added 10,000 employees, up to 50,000 people, while core earnings haven't increased much. How is that scale? Who do we hold accountable? What's Bank of New York doing about it? So the question is, why does the board continue to support management in the wake of lousy performance over the last decade?
Who's on that board? What do they look like?
Well,
I will tell you this much. They're old.
Well, last year when I was on your show, it was surprising to a lot of people. Over a year ago, they had the exact same board makeup as they had before the financial crisis.
Hold on a second. The board hasn't changed one iota since before the crisis.
Well, the good news is they're waking up. 4 of the 15 directors are new in the last year now. And so what I'd like to see, not only the CEO chairman answer questions, but I'd also like to see other members of the board of BNY Mellon answer questions. And other banks have allowed their directors to answer questions. Let's hear from...
But be honest. Be honest. Do you really want them to answer questions, or are you poking fun? Do you think they're qualified to answer questions, or is this your moment to really expose them?
No, I would like to hear answers. I mean, you have different directors in charge of different committees. Ideally, you'd have each director in charge of committee give a brief presentation. Oh, and by the way, you have the CIO of Trian Partners on the board.
Ed Garden.
Ed Garden. So let's hear from Ed Garden.
We're going to run out of time, Mike, so I want to get to Bank of America, because that's another annual meeting you plan to attend, and where you have some questions for the board, too.
Wow. I mean, this is an open invitation. If you said on your show Hillary Clinton might be announcing she's running for president on Sunday. If Elizabeth Warren wants to run for president, she can use, you know, Bank of America as Exhibit A. I mean, look at what this big bank does. They promote the CEO to also have the chairman job when 2 out of the last 3 years they had issues with the Fed stress test. They've had 4 chief risk officers in the last 8 years. Last year they had a $4 billion regulatory capital misstatement. And what do? They promote the person to chairman. So we intend to go to the Bank of America annual meeting and say, why did the CEO also get the chairman job?
So you will ask that question directly of Brian Moynihan, the guy who has both titles?
Answer that. And Brian's the one who wanted that job. Who can you ask that of?
Well, that's the issue here. So ideally, we'd have some other directors at Bank of America who would also answer that question. Otherwise, it looks like an incestuous industry that just is the poster child for bad governance, and that's what we're trying to change.
Is that what it is?
It's horrendous governance, I think.
It is the poster child for bad governance.
Well, I think that specific example, Bank of America has come a long way in terms of repairing their balance sheet, improving earnings. But in this specific case, promoting the CEO to chairman in the wake of the bad events of the last couple of years, that specifically is a poster child for bad governance. You don't think
that Bank of America has gotten themselves out of any hole at all?
Bank of America has increased capital, increased liquidity, shed assets. They've done a lot better. But still, for the next 4 or 5 years, you need good governance.
Mike.